Hey, what's going on YouTube? Welcome back. It's Travis here with JT Wealth. When I think of disruptive tech stocks, I often think of Netflix, Amazon, Tesla, even Robinhood, big name companies that have changed the way society lives on a day-to-day basis. But before all of these huge companies made it big, somebody had an idea. And when that idea went public, it was probably trading around $10 a share. So in today's video, we're going to talk about two disruptive tech stocks that are trading on the cheap right now that are hoping to bring that level of disruption to each of their respective niches. Now, it's 9 a.m., so I'm not going to crack a beer for you guys, but let's get into it. Alright guys, thanks so much for checking out today's video. Hopefully you find some value in it, and if you do, don't forget, smash that like button for me and consider subscribing to the channel if you haven't already. And like I said in the intro, today's video is about two disruptive tech stocks that are still trading on the cheap, but have potential upsides of more than 100% each. So we're going to talk about both of those stocks, see what they're all about, what niche they're looking to disrupt, and what the analysts have to say about these specific stocks. So let's jump right into today's article. And this article came out of TipRanks, and it says, buy these two names to invest in the disruptive tech trend. And basically they're saying, hey, if you ask any group of investors to list their favorite disruptive tech stock, no two is going to come up with an identical list. But you can set some kind of parameters to determine which ones are the best suited to succeed. And what you do is you basically just look at the tech universe, how they're bringing a new twist to the niche that they're in, and then how do you apply it to any type of business. Now, whatever disruptive tech you may choose to invest in, there are some general factors that you should consider. The first is that these are stocks that require patience. Kind of like biopharmas, disruptive tech firms are known for long lead times before they become profitable. Now, this can stem from development required for a product or the time necessary to penetrate a market, or perhaps both, or maybe even something else. But whatever the reason, investors need to be ready to hold for the long term. Now, TipRanks went ahead and picked out a couple of tech stocks, each offering disruptive potential. And according to Brian Dobson of Chardon Research, these stocks are sound choices for investors interested in disruptive tech. Both have entered the public market this year via SPAC transactions, or the special purpose acquisition companies, and both offer opportunity to make waves in their respective business niches. Now, here are those details. The first stock we're going to talk about today is Lottery.com. Now, ticker symbol LTRY is a newly public company in the online gaming space. The name really does say it all. The company brings lottery games to the world of online and mobile apps. They offer players the ability to remotely purchase legally sanctioned lottery games, up to 800 such games from 40 countries around the world. And Lottery.com publishes real-time results and allows players to choose their favorite games, buy their tickets online, and find out if they've won. It's an industry leader that takes lotteries to convenient and quick new levels. Looking at what the analysts have to say about LTRY, it's trading at around $6 this morning, but it has 150% potential upside to an average 12-month analyst price target of $15. Now, Lottery.com is also very secure. They use proven security systems to verify your customer's ID, age, and location, which is all necessary to keep the games honest and the cash outs for winners easily and reliable. Now, along with honest gaming, Lottery.com even has an initiative with wintogether.org to help nonprofit organizations gamify charitable donations, making a fundamental change in the incentives given to potential donors. Now, Lottery.com was the object of a SPAC merger in October of this year. It was acquired by Trident Acquisition Corporation in a move approved by Trident shareholders on October 28th. The lottery ticker hit the NASDAQ on the 29th of the month, and combined Lottery.com entity realized $63 million in gross proceeds from that business combination. Now, complete transparency, it has not been an easy ride for LTRY since the SPAC went public. The stock is actually down 59%. But on a positive note, Lottery.com reported its third quarter results last month and showed both increased revenues and a turn to profitability. The top line came in at $32.2 million, up from $1.6 million in the year-ago quarter, while net income switched from $1.2 million loss to an $11.2 million profit. Now, in Dobson's view, the analyst we discussed earlier, the positives should rule out the negatives, and he is bullish in the description of Lottery.com's overall position and prospects. He's quoted as saying, "The company has a significant first mover advantage in the digital transformation of a well-established industry. And in our view, Lottery is poised for growth through 2023, driven by new jurisdictions and rising market share." And to be fair, I honestly think a lot of SPACs that came out this year saw a massive spike because of the excitement behind SPACs, followed by a fairly sharp decline as everybody started to find what the average price of that stock should be post-hype. Alright, but Lottery.com, that's covered. Let's get into the second stock we are going to talk about today. And that is BM Technologies. We're shifting gears to the banking industry. Now, BM Tech is a digital banking platform and one of the largest platforms of its kind in the US. It uses cloud-based software to provide its customers with a suite of products, including checking and savings accounts with loans and credit. BM Technologies works with both individual and business customers as a full-service online bank, bringing the as-a-service digital model to finance and creating banking as a service, or BaaS. Taking a look at what the analysts have to say over on the tip ranks chart, BMTX trading this morning at around 11.15, but over 106% potential upside to an analyst average price target of $23 within the next 12 months. Now, BMTX is not actually a bank, rather a tech company with a platform offered to banks with an online presence. Account holders and bank customers are the end users. But BMTX's immediate customers are the banks, financial institutions, and non-bank companies looking to offer a new service to their own companies. It's in this niche that BMTX has the power to disrupt the banking industry, especially the digital banking industry. By divorcing the platform creation from the bank company, this tech innovator can focus on building the best software product and then marketing it. Now, like a host of other companies, especially in the tech sector, BM Tech was the subject of a SPAC merger earlier this year, just like Lottery.com. And BM Tech merged with Megalith Financial Acquisition in a combination that closed on January 5th. The combined entry started out with an enterprise value of $140 million, but the shares have also slipped since then by about 24%. Chardon's Dobson sees the company's business model as the key driver here, writing, quote, "BMTX is a leading provider of banking solutions for the higher education industry and also allows non-bank corporations to offer banking as a service to their customers via a suite of white label products best seen today through the current T-Mobile Money agreement." Now, over the next 3 years, we project growth in these segments will drive an 8.5% revenue CAGR. And should BMTX lock in a large new customer with BaaS win, our estimates could prove conservative. His buy rating on the stock comes with a $21 price target, enough to suggest an upside of over 87% in the coming year. And obviously, as bullish as he is, even his estimate is below the average for the analysts, which again was at 106% for the next 12 months. Alright guys, so those are the two stocks trading really cheap today that have massive upside potential in the next 12 months, both potentially doubling the price that we're seeing them at today. But as always, I'm not telling you guys to buy or sell any specific equity at all. All the information provided in today's videos comes from articles and is done so just for information and entertainment purposes only, to kickstart your own due diligence before you should invest any of your hard-earned money. And again, thanks so much for checking out today's video. I took the day off work, so I couldn't waste it. I wanted to get up early and really just do something productive with my day. So here's your first video of the day. Hopefully we'll have a second one coming out later. And again, thanks so much for checking out the video. If you haven't already, smash the like button for me, consider subscribing, and until next time, take it easy.